Well, folks, we got fresh speculation about the next CEO for Opendoor. In this episode, I'll be breaking down that story, as well as Anthony Pompliano's argument for why Opendoor is more than quote-unquote a meme stock. We'll be breaking down everything Opendoor in this episode, including some of the bigger macro news, including market jitters over the past couple days regarding a potential AI bubble. We'll break that down, as well as the Fed minutes that came out on Wednesday and what it might indicate for a September rate cut. All that and much more on this week's Midweek Check-In. As always, if you get value from these videos, make sure to share with a buddy, like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's roll. All right, so we got a lot to get into, of course, with Opendoor. As always, we've had speculation about a new CEO and what that might look like. We've had retail sending in various suggestions to the company. It's been a really exciting week on that front. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you want to support the channel, make sure to check the links in the description. All right, let's jump right into it. So first of all, we're going to cover Travis Kalanick. In case you're unfamiliar with Travis Kalanick, there have been various call-outs on X of late that he should be the new CEO for Opendoor. So who is he? So he is the former CEO of Uber. That's really what he's primarily known for. He was a co-founder for Uber. There was some controversy and, he got pushed out of there. But basically, he is the type of person that someone like Eric Jackson would envision as being capable of leading Opendoor into this next venture, this next season that the company is headed into. And so straight from Eric Jackson on X, here is his post. Why Travis should be the next CEO of Open, the ultimate redemption arc, wrongly forced out of Uber, now a chance to build something bigger. Friends with @Rabos, who wrote the original Opendoor biz plan, founder of DNA reunited and re-injected into the veins of Open. The new Open equals asset-light, AI-driven marketplace model, the Uber, Airbnb, Google of Resi real estate, hyper-efficient G&A operator, what Travis mastered at Uber. And then you talk about the real estate market being $20 trillion, $14 trillion of that tied to mortgages. No Uber equivalent yet. Multiples of that internationally. 1.5 million sellers request bids every year, which is less than 1% of the market. Drive that to a Tesla, like 10% over time, equals built-in demand. It all starts with a search for a bid. Assumable mortgages plus AI equals housing affordability revolution, which perfectly ties in with his/Keith's politics. And then he also mentions here in the post, cloud kitchens and Pony.ai are thriving and can be left to others, but no category is as ripe for quote-unquote Uberification as global residential real estate. So Uber is $200 billion in market cap today. U.S. real estate is a $20 trillion market. Open could be even bigger than Uber. How would the Uber board like them apples? The road to redemption, the road to Open, $500 a share, Eric Jackson says in this post. It starts with the return of the king. So this is very interesting, and Eric Jackson is not the only individual on X or really social media in general of late to throw out Travis's name as someone who could potentially be leading Opendoor into this next venture, right? Obviously, we had Carrie Wheeler step down last Friday, and as I've already talked about, she did a great job of keeping, the company afloat over the past year, and even Eric Jackson gives her kudos for that. But as far as this next phase that the company needs to get into and really just taking advantage of this retail hype, she was not the individual for that. However, Travis is an individual who could do that, right? He obviously, being a co-founder of Uber, understands innovation. Obviously, Uber is a highly successful company now. And so he has not directly tweeted back Eric Jackson or anyone else on X for that matter regarding, these call outs. But If he did that, you can best believe that Opendoor, I believe, would skyrocket off that if he acknowledged it and just simply said, hey, I'm in, or anything like that. But we haven't gotten anything like that as of yet, but this is definitely interesting, and I'm definitely loving the memes right now. This was an image I saw on X today of Travis with the Opendoor crown on. So we'll be keeping tabs on that and see if any other names are thrown out. But as of right now, it seems like the retail community is really focused on Travis. And the interesting thing is the retail community was also very focused on Carrie Wheeler not being CEO anymore and essentially pushed her out. So we'll see if anything comes of this or if any other names are floated. So that's what we got on that right now. I just thought that was interesting, and definitely an individual to, be looking into. He's obviously been highly successful, so we will see what comes of that. And speaking of the power of retail, folks, this was an interesting tweet from Anthony Pompliano that he put out earlier this week. The people calling Open a meme stock don't understand what is happening. Retail investors are now a hive mind working together to identify opportunities, take financial positions, and advocate for improvements at target companies. Think of it as a decentralized hedge fund. Everyone directs their own capital and makes their own decisions, but they loosely collaborate to use their collective intelligence to surface the best ideas. Look at the hundreds of product suggestions that people have sent to Opendoor executives. Look at the feedback on company communications or the identification of potential M&A opportunities. 100% agree with Anthony on this front. I mean, it's really a very interesting idea to think of it as a decentralized hedge fund, right? If we think about the retail movement and the connotation of meme stock, right? It's typically something that is viewed negatively, right? It's not viewed positively. And essentially, Anthony is attempting to flip the script, right, in a sense, and kind of reframe things. And really, he's got a point here. Think about the fact that the entire retail community, including Eric Jackson, Anthony Pompliano, all the millions of shareholders that Opendoor has, and all the eyes on it now from the retail community, had we not been here, the chances that Carrie Wheeler would still be CEO, I believe, are very, very high. That kind of move where she resigns does not happen without the retail movement that, has come about over the past month. And that is just a testament to the power of the people, so to speak, that is going on right now. And so essentially what Anthony is saying is we're essentially, with Opendoor, acting as if we are a hedge fund, just decentralized. Everybody has their own money. Everyone's making their own decisions. We just so happen in the aggregate to come together to believe that Opendoor is a great investment. Everybody put their heads together and put out, various tweets and various mentions on social media about how, essentially we didn't believe that Carrie Wheeler was going to be that individual to take us to the next step. And she stepped down. The CEO of a billion-dollar company stepped down essentially because of retail pressure. That is huge. And I cannot overemphasize that enough. If we look at GameStop, if we look at AMC from 4 years ago, this is something that is black and white as far as the differences between the two, right? Sure, if you want, you can group all three of them together as meme stocks. That's fine. Obviously, Wall Street Bets has been a big proponent of, getting Opendoor where it's at right now. It's had a lot of eyes on it. So naturally, anything associated with that is going to be considered a meme stock. But let's be honest. Retail did not have this kind of power with GameStop and AMC. They did not have the ability to kind of switch up the boardroom in a sense, which is exactly what's happening right now with Opendoor and Carrie Wheeler exiting. So Anthony is basically saying we're acting as a decentralized hedge fund, and I think it's just a brilliant tweet that he put out here, and just a brilliant idea because I believe it is true. And, who knows what could be next, right? This is just maybe the evolution, if you will, of what it looks like for the retail community to get a hold of these various stocks, right? It starts initially with just interest on it, and it starts moving up. And now it's almost like we've hit this next level where, boardroom decisions are being had based upon retail and community pressure. So this is very interesting to me. Let me know what your thoughts are on this, if you think he's onto something here or not. But, I mean, I would have to say he's definitely onto something here, especially if Travis ends up becoming the CEO, because that initial thought came out via X, right? So obviously we don't know if Travis is going to be the CEO or not, but we do know that right now Opendoor as a company with, Shrisha being the interim CEO, they are taking feedback from the community, from the retail community, as we continue to send in various suggestions, right? They are taking all that feedback in, and that's also a piece here in this tweet from Anthony that he acknowledges. The feedback on the company communications is massive right now. So I thought that was very interesting, and definitely something to keep tabs on, right? As we continue to move forward, as the story continues to unfold, what's going to be the next step, right? What's going to be the next layer where retail can kind of push in and really show ownership in this company? Because a hedge fund literally does that, right? A hedge fund buys up companies, and in some cases with the intention of being more of an activist, right? Changing leadership, changing the direction of the company. And right now, retail as a collective is doing exactly that. So very, very interesting indeed. All right, so this was another tweet from Eric Jackson. Open is now the #1 most popular retail stock in the world. This is past Palantir. There's nobody else close. So very exciting. Obviously, this is just more to the point that the retail community is still very much involved in Opendoor here. Here's an interesting tweet from Han Hakamatsu. There's a high possibility that shorts are about to get squeezed above the $5 range mark. Measured moves suggest stock can see $14 to $16 in case things work as they should. Also, very interesting tweet there. So speaking of the charts, let's take a look and see where we're at right now on Opendoor, right? So Monday looked fantastic. We got a push up to 392. Which is that 23% Fibonacci level that I've been calling out. So we got that on Monday, and then Tuesday pre-market, if we just drill down here to a 10-day, 30-minute chart and take a look at Tuesday right here in the pre-market, it looked very, very juicy, folks. We hit 425 in the pre-market, and, I told a couple buddies of mine this Tuesday morning, when I saw that move up, I was thinking this could easily be an 80% kind of day where we finally cracked that $5 wall. Unfortunately, that didn't happen. And I'll get into some of the reasons why that didn't happen beyond the simple fact that there was just, more selling pressure than buying pressure. You also had the AI stocks kind of selling off, overall macro trend to the downside that really weighed on Opendoor. And here's the thing, Opendoor, for better or for worse, right? It's kind of a double-edged sword. It does track with the market, right? It is in the real estate industry. So it is, in a sense, heavily reliant upon, how the overall market is doing. It's going to be impacted by that, of course. So on Tuesday, pre-market looked great, cracked 425, got above that 392 level. Again, that 23% Fibonacci level. And then we got smacked down. And I think we were down about 4%. And then as you can see on Wednesday, we have more selling pressure. Now we did come down to retest the 38% Fibonacci level, which I have marked out as $3.27. Got a bounce intraday on that. And then we did end up trending below that towards the end of the day. Now in after hours, for what it's worth, we did reclaim that, at least at time of recording here. So we will see what we have in store for pre-market on Thursday morning. But overall, folks, I mean, there's obviously some selling pressure going on right now in the stock. I think that's more so just the overall market trend right now, as we've had some downside pressure. I am not too concerned about this right now. I think it's a bit of a healthy pullback. And if we take a look at the RSI right now on Opendoor, we are currently sitting at 62, which I think is fantastic, because if we just take a look at even on Monday, we were, upwards of 73. So again, touching some of that overbought territory on the RSI. So I'm not too mad about the fact that we were able to cool off a bit on the RSI, maybe reset. And really what I'm looking for on Thursday and Friday is to see if we can hold that 327 level. I want to see buyers step in there, treat that as support, right? And then see if we can make another move up for 392, that 23% retracement level. So that's kind of what I'm watching there. As far as the volume, it still looks pretty good. And, if anything, it's kind of dissipated past couple of days relative to what we saw on Thursday and Friday last week. But it is still overall pretty high relative to, what we've seen in the past from Opendoor. And so the interest is still there. There's still a lot of action happening. Wednesday was, 245 million in volume. So still a lot of action. But again, we need to hold this level. If we don't, as far as next downside levels that I'm looking at would be $3 as a psychological level. And then as far as the Fibonacci retracement levels, I'm looking at 274. Below that is another potential support. Now let's take a look here. Keep in mind, right? We've had two red days, right? Keep that in mind before I show you this next piece here, because now we're going to take a look at the options chain, as we always do, right? To get a gauge on sentiment for the stock. And as of right now, from Wednesday's action at least, we had a put to call ratio of 0.34, folks. I do not think I have yet to see a put to call ratio above 0.50. Which is significant to me because what it indicates is that the options chain remains heavily bullish on Opendoor, regardless of whether it's a red day or a green day. And if we take a look at, just the Friday expirations, right? Let's just take a look at what expires this coming Friday. As far as open interest goes right now, folks, you have a ton of interest sitting at the $4 strike. We got over 82,000 open interest contracts. You got 76,000 sitting at $5. You got 34,000 sitting at $3.50. There's a ton of open interest on here relative to the put side. If you take a look at the put side, the highest open interest you have is only 33,000, right? So we're talking, double that on the call side. So it's a very heavily invested options chain for the August 22nd, this Friday, right? Expiration. So what does that mean for Opendoor as a stock over the next couple of days? In my opinion, if we get in a position where we can find some support and start trending back up towards that $4 level, that means that market makers are going to need to hedge for all of these calls that they wrote, right? They have to remain net neutral, as we've talked about before. So as the deltas on these contracts expand, right? As the deltas grow, as the stock moves up, you're going to have market makers needing to hedge for that. And so essentially you're in a position, best case scenario, if we're able to, get above 350 and then get a break above 4, now all of a sudden you have 82,000 contracts at that $4 strike that all of a sudden market makers need to hedge for up here in this $4 range. And then it kind of becomes like a self-fulfilling prophecy because market makers, to remain net neutral, have to buy up, shares to remain net neutral for all that open interest at the 4. That obviously just continues to push the stock up, which then in turn makes the deltas grow on some of these further out of the money contracts, such as the 450s, the 5s, right? Where you got another 76,000 open interest sitting there, right? So that's what people refer to as a gamma squeeze, right? So not to be confused with a short squeeze. Short squeeze is not the same as a gamma squeeze. This is got all the makings for what could potentially be a gamma squeeze towards the end of the week. Again, that is all contingent upon the fact that we can continue to get upward momentum. And if the overall market is being dragged down, that is going to be headwinds for Opendoor and won't be that great. But if the market is able to rebound over the last 2 days of the week here, that could be tailwinds for Opendoor. Not to mention if we get any new drops on X, from the company related to their CEO search or Eric Jackson being on the board, anything like that, right? That could just be more fuel to the fire. So I believe it is setting up Very, very interesting. And also keep in mind, we are still up an insane amount over the past week, something like over 50%. And clearly, just by looking at this daily chart here, right, this is not a pump and dump. A pump and dump would have been up like this to 497 and then crashed back down to 50 cents or $1, something like that. That is not what we got here. We got a new floor right around $1.70, and we have been building momentum back to the upside, looking to break that 497 level. So, things are looking very, very interesting right now. And as far as Eric Jackson getting on the board, folks, I don't know about you, but this man deserves a seat. He put out this tweet on Wednesday, day one of standing outside at Drake's house until he buys at least one share of Open. He said, started from the bottom. Well, so did we. Let's ride. I mean, this is just incredible. This is so funny to me that Eric Jackson is going this far to support Open. I mean, the dude is literally standing outside of Drake's mansion in Canada, right? I mean, talk about the dedication. Shrisha, put this man on the board by Friday. He deserves it. So just had to share that. I thought that was hilarious. If we take a look at Opendoor via Fintel.io, just for some of the institutional action that we have been seeing over the past few days, I do like to keep tabs on this. As far as institutional ownership, folks, we're sitting at 52% of the float being owned by institutions, according to Fintel.io. Pretty significant, in my opinion, definitely higher than GameStop and AMC had during their squeezes in 2021. Now, if we take a look at some of the recent 13F filings, again, these are institutions that are required by SEC rule to disclose their positions. As long as they have assets under management greater than 100 million, they have to disclose these. Again, this is a 13F filing is what it's called. You can also look these up on sec.gov, of course. But as far as some of the recent transactions, right, taking a look at this here, you got some new positions that came out on August 19th from Merrick's Group, Advisory Services. Nothing too crazy, 160,000 shares, 17,000 shares. Anything in green indicates a brand new position. Anything in red indicates a closed position. So these are the various ones that we have seen this week. In case you are not paying attention to this, we have had some companies increase their stakes, right? So for example, here you have an 84% increase in the position from Nationwide Variable Insurance Trust. They now have a total of 391,000 shares. But the really interesting one that I wanted to point out here was 2 Sigma Investments. Folks, they increased their position 88% back on August 14th and now hold 10.6 million shares, right? I think that is very significant considering the fact that they are creeping up into some of the larger holders of Opendoor. So that was very interesting. 2 Sigma Investment significantly increasing their stake in the company. And why else would they do that, folks? Unless they believe that this thing was going to go higher, right? So that's what we got right now on Opendoor. Let's see what Thursday and Friday looks like. I know a lot of folks out there have been, kind of depressed over the past couple of days with some of the selling pressure we had gotten, especially with that tease and pre-market up to, 425. It looked like we were going to break 5 that day. It didn't happen yet. You got to have patience. You got to have a game plan. Not financial advice. I myself, I have a position in Opendoor, of course, as I've said before. I have some calls. I have some shares, but it's balanced, right? Make sure you have an exit plan as well. Make sure you're taking profits along the way. But I'm very excited to see where this thing goes over the next couple weeks and next couple months. I think that the momentum is there. Everything's kind of lining up. The options chain looks bullish. Institutions are clearly bullish. We have all the speculation about who the new CEO is going to be. If Eric Jackson gets on the board, that's even more fuel to the fire. And the retail interest is not going anywhere. So this feels very reminiscent of AMC, of GameStop. You had a retail community that was very loyal. You got a retail community with Opendoor that's also very loyal and continues to build and build and build. And as we saw from that tweet from Eric Jackson, it's now the #1 retail stock in the world. I don't think it's going anywhere anytime soon except up. All right. So let's move on to some of the bigger, macro news. First of all, what I want to do though is kick it off with a brief look at what we've seen, right, on the chart. So as far as the S&P 500, right, this thing has kind of gotten beaten up over the past few days. And this is what I was talking about as far as Opendoor goes, right? Opendoor kind of got dragged down, honestly, over the past couple of days from the overall market and just from a lot of the pressure that we've seen on the tech stocks, right? Tech stocks have really been in a position of late where they've been getting beat up. So taking a look here at the S&P 500, I have my Fibonacci extension levels lined out here that I've talked about before on the show. And basically on Wednesday, we came down and pretty much tapped this 50% Fibonacci extension level that I had laid out here of 63.34. So you can tell here, once again, folks, I'm such a big advocate for Fibonacci levels. They work so well. You can see how we came up. This was resistance on this level, and we came back down, and now we're testing this out. And you can see that the bulls bought it back up. So S&P 500 currently, sitting above the 20-day moving average, which is good. We did briefly close below it, but then we did manage to buy it back up on Wednesday. So that was good to see. Taking a look at the tech-heavy NASDAQ via the Qs. This, unfortunately, is below the 20-day moving average, which makes sense because of the fact that, AI stocks, in particular tech stocks, have been getting beat up. A lot of concerns of late regarding the validity and whether or not we're in sort of an AI bubble right now that might be similar to, the tech bubble that we saw in the 90s, right? So you can see the volume right here on the Qs from Wednesday. It was pretty high relative to past few weeks. So a lot of conviction there, but, buyers, again, stepped in here just like they did on the S&P. Let's take a look at IWM. IWM right now is above the 20-day moving average, which is good, sitting at 225. And if we take a quick look here at the VIX, of course, given some of the selling pressure that we've seen over, the past couple of days, has been kind of upticking. We were as low as 14, pretty much like a 5-month low on the VIX. And we got as high as 17 on Wednesday. And then as the market bought up the dip, so to speak, we saw the VIX come off essentially. So we did close on Wednesday on the VIX at 15. So it is creeping up a little bit, but it does appear, at least in the short term, that buyers are stepping in on the overall market and really just, tech stocks. Tech stocks have been getting beat up. Let's take a look at Palantir real quick. I mean, Palantir, folks, this thing was hitting an all-time high of 190 not that long ago. And you can see here we've had 5 red days in a row and, basically a capitulation moment almost off of this volume that was just so explosive relative to what we have seen on that. Got below the 20-day moving average. And as you can tell on Wednesday, we were able to buy the dip after it dropped all the way to 142. And we are holding the 50-day moving average right now on Palantir. And really, the RSI needed a cool off. It was sitting at 80. It was very high. And now it's all the way down to 42. So, as far as, Palantir goes, if you zoom out, you see these dips, right? As we continue higher, this might just be another dip opportunity. I, for one, believe it is. This would be a great opportunity to step in, especially after that 190 high. I mean, folks, what a nice reset. But let's see if it holds. And then let's take a look at Bitcoin via TradingView. At time of recording, we are sitting at 114,500, up 0.2%. And Bitcoin, basically made a new all-time high a couple weeks ago rather. And then since then, it's kind of been sold off with, some of the AI fear that's been gripping the market over the past couple of days. Because again, Bitcoin is a risk-on asset. So as the market was selling off, we saw the same with Bitcoin. But it does look like, again, at time of recording, we are finding a floor here that kind of lines up with what was resistance back in late May. So we'll see if Bitcoin can gain off of this level right here. But as of right now, it looks like 112, roughly 112,300. 112,300 is going to be the new floor for Bitcoin. All right, now let's move into some macro news. So taking a look here at this article from Barron's, the tech stock sell-off spells trouble for the AI trade, why markets are twitchy. So an unexpected tech sell-off has woken the market from its summer snooze. Investors may have been dreaming of a calm week, culminating in Federal Reserve Chair Jerome Powell signaling multiple rate cuts ahead and more gains for stocks. That may still happen, but Tuesday provided a reminder of how reliant the market is on tech companies and the artificial intelligence boom. The S&P 500 fell 0.2% for a third consecutive day, despite a decent performance by the majority of its constituents. More than 350 of the index's stocks finished higher. The year's winners suddenly became yesterday's losers. Palantir, of course, led the way lower, tumbling 9%. AI server makers Supermicro Computer, chip maker AMD, and software company Oracle were also among the biggest decliners. But the sell-off was indiscriminate. Most tech stocks were caught up in it. The bigger the rise this year, the harder the fall yesterday. There were a couple of catalysts, but nothing that really warranted the pressure. OpenAI CEO Sam Altman warned that AI is in a bubble. Very interesting. While an MIT report concluded that 95% of generative AI initiatives at companies are failing to achieve rapid revenue growth. The big moves off relatively little news suggest a nervousness creeping in when it comes to the AI trade. It could also be profit-taking or a summer slump, but perhaps investors are finally starting to get twitchy about valuations. The market may quickly get reassurance or otherwise when NVIDIA, another sharp faller Tuesday, reports earnings next week. So obviously AI has been booming over the past few months. We've been in this AI frenzy. Everything's been getting bought up. Oracle, as the article mentioned, AMD, NVIDIA being the most valuable company in the world, which we covered when that happened, last month. And really we're at a point now where some people believe that AI is getting a bit frothy as far as valuations. If you look at the forward PE on the NASDAQ, I think I saw the other day, it was like 27, 28. It's very high, right? And so it doesn't make sense that we are due for a bit of a pullback before we continue higher, reevaluation, so to speak, of, where we are at right now. And so, especially with Sam Altman coming out and saying that he believes that, we may be in an AI bubble, I think is very nerve-wracking, of course, for a lot of AI investors. And so it makes sense that we've seen a bit of the selling pressure of late. But again, I don't believe that we're in the situation where the market's just going to tank 20%. We're not going to see something like we did with tariffs being announced back in April. I just think we simply need a bit of a pullback here, kind of digest the moves that we've seen over the past few months before we continue higher. Kind of feels like a buy the dip moment, right? So if you are interested in, getting involved in AI stocks, it really seems the past couple of days have really set you up for the potential to get some nice prices and get in there. So we'll be keeping tabs on that. Obviously, the AI trade is big, right? Tech holds up a massive portion right now of the market, especially by market cap weight. Again, NVIDIA is the largest company in the world, so it's going to have an impact on the market when you get companies like Palantir, like NVIDIA, like AMD, that all of a sudden, are not continuing higher and are starting to, sell off. So by the dip moment or continuing lower, let me know what your thoughts are on that. If we take a look at the heat map for, basically the overall market, if I can find it here. There we go. So taking a look at the heat map from Wednesday, of course, NVIDIA was down. It's the largest stock in the entire market. It was basically flat on Wednesday, but Tuesday it was down something like 4%. So that's a massive move. But as you can tell, right, you got some of the bigger tech names here. This is a better visual representation of what we've been seeing in the market. Kind of a mixed bag elsewhere. And again, bulls stepping in towards the end of the day, buying the dip, definitely helped with that. But we are kind of in this indecision period right now. So we will see what happens the remainder of the week. And another thing that's keeping investors kind of antsy right now, kind of nervous, is going to be that Jackson Hole Symposium, as you have the Fed coming together towards the end of this week. And then, of course, Jerome Powell speaking on Friday. This article here from Barron's, Fed minutes show a growing disagreement over rate cuts. So Federal Reserve officials are increasingly at odds over the path for monetary policy. Minutes from the central bank's July 29-30 meeting released Wednesday show a committee wrestling with conflicting economic signals and struggling to reach consensus on everything from tariff impacts to the health of the labor market. They also reveal a growing schism over whether the Fed is falling behind the curve on rate cuts. Those divisions help explain the first dual dissent from sitting Fed governors in more than 3 decades. Governors Michelle Bowman and Christopher Waller voted to cut rates by a quarter point instead of keeping them steady in the 4.25 to 4.5 range, as policymakers chose to do. The 9-2 vote marked the first time since 1993 that multiple governors broke with the majority. In the minutes, officials expressed numerous conflicting opinions on the inflationary impacts of tariffs. Some policymakers said they needed more time to assess how trade policies might affect prices, while others pushed back that waiting for that clarity wouldn't be feasible or appropriate. Others stressed that tariffs' effects on inflation would depend importantly on the stance of monetary policy. Policymakers also disagreed about the job market. Some participants observed that the unemployment rate remained low and that employment was at or near estimates of maximum employment. Others pointed to easing wage increases and slower job growth that could suggest a softening in labor demand. So obviously we got, basically from the Fed minutes that we got on Wednesday, it does seem like based off of those comments that, again, these are backlogged 3 weeks from that July rate decision. You obviously had the 2 dissents, but everyone else on board felt like it was appropriate to keep rates where they are. And so, yes, the odds of a rate cut have increased for us for September, but getting this information from, July's meeting, I don't think really helped any kind of confidence in the rate decision. Kind of leaves us where we've always been with Jerome Powell, which is this point of we're waiting on the data and holding firm and not really, caving in to, President Trump's, demands for a rate cut. If we take a look at CME Group right now, as far as the projections for a 25 basis point cut happening at that September 17th decision, we've dropped off a little bit, right? So we were up to about 95% chance for a 25 basis point cut. And as of right now, we're sitting at 81.9% chance. So the odds have come down a little bit. We had a really, really hot PPI inflation report that came in last week that really told the Fed, hey, inflation is still a bit too hot. And so that kind of hurt some of the odds for the Fed rate cut probability. And if we take a look at October, the chances now for an additional 25 basis point cut in October down to 45%. So the odds have dropped a little bit. I still think we're sitting in a good position for a 25 basis point cut in September. But really, here's the key takeaway. The market right now is a bit nervous, again, because of the AI news that came out from MIT, Sam Altman's comments about, being a bit frothy, maybe being in an AI bubble. It's caused some of the tech sell-off. But in addition to that, you now have Jerome Powell speaking this Friday. And really what the market is afraid of is if he is going to have more of a hawkish tone, especially in light of that PPI report that came out last week. Really, the best case scenario for the bulls is that Jerome Powell comes out on Friday and guides for a September rate cut, or at the very least has a dovish tone. Now, the chances of him actually guiding for a rate cut are very, very slim, in my opinion, especially after how he has handled really this whole year. He's been very firm in his stance, sticking to the data, right? So I don't expect him to come out and say, hey, we're going to cut 25, points in September. However, if he even has a slight dovish tone on Friday, I think that would be a good sign for the bulls and really the overall market as we continue to try and price in that rate cut for September. So definitely be paying attention to that. Jackson Hole Symposium, again, happening as we speak here towards the end of the week. And then we get Jerome Powell speaking on Friday. This was also some interesting news that came out from MarketWatch here. In case you weren't paying attention, Intel got a new investor. So we did talk about how, the Trump administration wanted the CEO for Intel to step down. Then the government floated the idea of taking a stake in Intel. And then we got news this past week that SoftBank's investing $2 billion. So a $2 billion stake in Intel. So as the article says, SoftBank's $2 billion stake could help the chip maker gain customers and increase Intel's earnings per share. So SoftBank Group Corp's $2 billion investment in Intel Corp could be the catalyst the struggling chip maker needs to turn the corner, some analysts believe. While the deal creates more shares, thus decreasing earnings per share, REITs argued in a Tuesday note to clients that this is a case of, quote, accretive dilution that would benefit shareholders in the long term. A potential U.S. government stake would also be dilutive, but would help firm up long-term prospects. The deal between SoftBank and Intel would involve the creation of roughly 87 million new shares, adding an incremental 2% to Intel's overall share count. REITs believes the transaction will happen before the end of the year. So yeah, you're getting a bit of a dilution happening to Intel due to SoftBank's $2 billion stake. They're going to have to add shares. I mean, Intel already has an absurd amount of shares. I think it's something like 2 billion already or something like that. But, Intel has been in the news of late, obviously with President Trump and some of his comments and backlash towards the CEO and his involvement with China. And then, again, the announcement that the U.S. government might get involved. Now SoftBank's getting involved. And so really, this is a company that struggled for a while, but now getting some backing, a very big backing, I might add, from SoftBank. So we will see what that does for the share price. I know there are a lot of individuals on Wall Street Bets paying attention to this. One in particular that, put basically his whole life savings, as I understood it, into Intel when it tanked so hard, dropping out of the Dow. And so it's going to be interesting to see if this thing can recover now. Really, the first level of resistance I'd be paying attention to is that 27.46 roughly. And then you got the gap fill to 28, right? So this is when we had the drop out of the Dow for Intel. So really, you've had since, basically August of last year, you've had a whole year here on Intel where you've been looking to close this gap back up to basically 30. So we will, be keeping tabs on that, see if the U.S. decides to take a stake in the company. But as of right now, it looks like SoftBank is going to be the one. So it might be something worth, buying some long-dated calls on Intel, maybe some leaps, right? Or if you want to play safe, some shares. But I would expect some, short to midterm upside for Intel, as it does seem that, you have various parties interested in supporting the struggling company. So that's what we got there. Let's move on to the economic calendar as far as the rest of the week. So Thursday, August 21st, right? Initial jobless claims come out at 8:30 a.m. Eastern. You got the Philadelphia Fed Manufacturing Index coming out as well. S&P Global Services PMI. Existing home sales. This is going to be an important one, I believe, for Opendoor, either a positive or negative catalyst, depending upon what that number looks like. If we get a positive number, an uptick in existing home sales, I think that would be in line with some of the recent articles we've been seeing as far as the mortgage rates starting to decline. So that could be a good thing for Opendoor, right? As of right now, the previous number there was 3.93 million, and we got a forecast of 3.92 million. So a slight downtick as far as the forecast for existing home sales for July. Let's see if we can match that number, if it comes in line at least, or if we can slightly beat it. That'd be great. I'm really interested to see what existing home sales look like in August in light of some of those mortgage rates starting to come down, right? So we will be keeping tabs on that. And then, of course, the big doozy, Friday, August 22nd, Fed Chair Powell speaks. And that is going to be at 10 a.m. Eastern. Mark your calendar. All right, quick check-in on earnings via Earnings Hub here. As far as the remainder of this week, what we got going on, you did have Home Depot that reported earnings on Tuesday. It did not look that great from what I saw. But then you had Lowe's come out on Wednesday and they smashed it out of the park, and they even had an acquisition. You had Target report earnings as well. But the big one for Thursday before the bell, which will most likely be out before this recording drops, will be Walmart. Eyes will be on Walmart as one of the larger companies in the U.S. stock market, especially as it relates to the consumer, right? We want to see how the consumer is doing. Walmart is a great insight into that. So we get Walmart reporting earnings before the open on Thursday, August 21st. So definitely have tabs on that. I'm sure that'll have an impact on the overall market and what direction we initially go. So a lot of exciting stuff going on right now, especially with Opendoor, of course, continues to captivate the markets, the hottest story in the market. And the past couple of days, we've kind of been dragged down by the overall market and some of the jitters related to AI and whether or not Jerome Powell is going to cut rates in September. Obviously, if he cuts rates, that's going to be fantastic for Opendoor. But overall, folks, I'm still very confident in this play. I like what Eric Jackson and Anthony Pompliano are bringing to the table as far as kind of being the champion, so to speak, for the retail community. I like the fact that the retail community is so involved with Opendoor and their interim CEO and the board and just putting out ideas via platforms like X as far as mergers and acquisitions and different things that they can do as a company. This company has a lot of potential. Now we just need to see the board actually fulfill this. So very excited to see what happens. Let's see if we can get back above 4. Let's see if we can get a gamma squeeze going on and get set up really for the next week ahead. Be keeping tabs on Jerome Powell talking on Friday again. That's going to be very, very volatile for the market. Let's see if he's dovish or hawkish. Leave a comment though. Let me know what your thoughts are on Opendoor, on the Fed. Should they cut rates? Should they not? Let me know what you think about the AI tech bubble. Are we in one, as Sam Altman seems to think? Are we not in one? Would love to get your thoughts. Appreciate the support as always. It means a ton. We've seen a lot of channel growth over the past month especially. So thank you so much. Again, make sure to share this with a buddy, share it with a friend, your aunt, your uncle, whoever. And folks, as always, remember, plan the trade and trade the plan. Have a good one.